Question 1. Which of the following best describes the definition of own occupation disability in a disability insurance policy? A. Disability that prevents the insured from performing the duties of any occupation for which they are reasonably qualified by education or experience. B. Disability that prevents the insured from performing the material and substantial duties of their specific occupation at the time of disability. C. Disability that results in total inability to perform all activities of daily living adults. D. Disability resulting in an inability to perform any occupation in the national economy regardless of income or qualifications. Answer. B. Explanation. The own occupation definition of disability specifies that the insured is considered disabled if they cannot perform the material and substantial duties of the occupation they were engaged in prior to the onset of the disability. This is a favorable definition for the policyholder as it does not require them to prove that they cannot work in another field or occupation. Why other options are incorrect? Option A. This refers to the any occupation definition of disability, which is more restrictive. Option C. This describes a catastrophic disability not specific to own occupation. Option D. This is more aligned with the Social Security Disability Insurance (SCI) standard, which focuses on work in the national economy. Rule reference. Own occupation definitions are common in policies for professionals, e.g., doctors, lawyers, and provide higher protection as the insured can still receive benefits even if they can perform other less specialized work. Question 2, scenario-based. Mr. Thomas, a 45-year-old architect, purchased a long-term disability (LD) policy with a $5,000 monthly benefit and a 90-day elimination period. After severe accident, Mr. Thomas is unable to work as an architect but can perform other types of work. His policy uses the own occupation definition of disability for the first 2 years and transitions to any occupation thereafter. Assuming Mr. Thomas cannot work as an architect but could work in a retail management position, what happens to his benefits after the first 2 years? A. Mr. Thomas will continue receiving full benefits because he cannot perform the duties of his own occupation. B. Mr. Thomas will no longer receive benefits because he is capable of performing another type of work. C. Mr. Thomas will receive partial benefits because he has some ability to work. D. Mr. Thomas's benefits will be prorated based on his residual earning capacity. Answer. B. Explanation. The scenario specifies that the policy transitions from an own occupation definition to an any occupation definition after 2 years. Under the any occupation standard, Mr. Thomas would no longer be considered disabled if he is capable of performing any gainful employment for which he is reasonably suited by education, training, or experience, such as retail management. Why other options are incorrect? Option A. Full benefits only apply during the own occupation period, the first 2 years. Option C. Partial benefits may apply if the policy includes residual disability coverage, but the question specifies total benefits. Option D. Prorated benefits are tied to residual disability provisions, not the any occupation standard. A rule reference. Policies with a split definition of disability alone occupation transitioning to any occupation reduce benefits after the initial period if the insured can work in another field. Question 3. Which of the following is TIUE? Regarding the elimination period in a disability insurance policy. A. The elimination period is the waiting period during which no benefits are paid, and it begins when the claim is approved. B. A shorter elimination period generally results in low premium costs for the insured. C. The elimination period is the time the insured must wait after becoming disabled before benefits begin, and it is typically 30 to 180 days. D. Benefits are retroactive to the beginning of the elimination period once the waiting period has been satisfied. Answer. C. Explanation. The elimination period is a waiting period that starts on the date the insured becomes disabled and must pass before disability benefits begin. Common elimination periods range from 30 to 180 days, depending on the policy. Why other options are incorrect? Option A. The elimination period starts on the date of disability, not when the claim is approved. Option B. A shorter elimination period results in higher premiums because the insurer assumes greater risk by starting benefit payments sooner. Option D. Benefits are not retroactive to the start of the elimination period, they only begin after the elimination period is satisfied. Rule reference. Elimination periods help insurers reduce claims for short-term disabilities and control premium costs. The insured must plan for this period, often through savings or short-term disability insurance. These questions test conceptual understanding, problem-solving, and the ability to apply Louisiana disability insurance concepts in realistic situations. The detailed explanations help students grasp the underlying rules and principles. Question 4. Which of the following best describes the purpose of the elimination period in a disability insurance policy? A. It determines the maximum period during which benefits are paid to the insured. B. It acts as a waiting period before disability benefits become payable. C. It allows the insured to adjust their premium payments over time. D. It defines the specific occupation covered under the policy. Answer. B. It acts as a waiting period before disability benefits become payable. Explanation. The elimination period in a disability insurance policy is the time between the onset of the disability and when benefit payments begin. This period acts as a deductible in time rather than money. It helps insurers reduce costs by avoiding small or short-term claims. Incorrect options include A. This describes the benefit period, not the elimination period. C. Premium adjustments are unrelated to the elimination period. D. This refers to the MOAN occupation or any occupation definitions of disability. Question 5. Paul is covered under short-term disability (STD) group insurance plan that provides weekly benefits for a maximum of 26 weeks. If Paul is disabled for 8 weeks, how will his benefits be taxed, assuming his employer pays 100% of the premiums? A. The benefits will be tax-free to Paul. B. Paul will pay taxes on 50% of the benefits received. C. The benefits will be fully taxable as income. D. Only 25% of the benefits will be taxable. Answer. C. The benefits will be fully taxable as income. Explanation. When an employer pays the entire premium for a disability insurance policy, benefits received are fully taxable to the insured as income. This aligns with IRS rules for group disability plans. Incorrect options. A. Benefits are tax-free only when premiums are paid with after-tax dollars by the employee. B and D. These are incorrect taxation scenarios that do not apply to fully employer-paid policies. Question 6. Scenario-based. Mr. Thompson works as an attorney and purchased in own occupation long-term disability policy. After suffering a hand injury, he can no longer perform legal writing or courtroom activities. However, he can still teach law classes part-time. Under his policy, what benefits would Mr. Thompson likely receive? A. Full disability benefits since he cannot perform the duties of his occupation as an attorney. B. Partial benefits since he can still work in a related field. C. No benefits because he can earn income by teaching law. D. Benefits equal to the income lost offset by his teaching income. Answer A. Full disability benefits since he cannot perform the duties of his occupation as an attorney. Explanation. Under an own occupation policy, the insured is considered totally disabled if they cannot perform the material and substantial duties of their specific occupation at the time of disability. Mr. Thompson's teaching role does not negate the fact that he can no longer work as an attorney. Incorrect options. B. Partial benefits apply under residual disability and not own occupation. C. Teaching income does not disqualify him from full benefits. D. Income offsets are not relevant under own occupation definitions. Question 7. What happens if an insured submits a proof of loss later than required under a disability insurance policy, but the delay is due to circumstances beyond their control? A. The claim will be automatically denied. B. The insurer must still consider the claim if the delay is justified. C. The benefits will be reduced proportionally based on the delay. D. The elimination period will restart, delaying payments further. Answer. B. The insurer must still consider the claim if the delay is justified. Explanation. Most disability insurance policies contain provisions stating that if proof of loss is delayed due to circumstances beyond the insured's control, e.g. incapacitation, the insurer must still consider the claim. This aligns with standard legal and contract practices protecting insured parties. Incorrect options. A. Automatic denial does not apply if justified. C. Benefits are not reduced based on late submission. D. The elimination period is not affected by proof of loss delays. Question 8. Which of the following provisions in a disability insurance policy guarantees that premiums will be waived while the insured is receiving benefits? A. Cost of living adjustment (COLA) rider. B. Waiver of premium rider. C. Guaranteed insurability rider. D. Return of premium rider. Answer. B. Waiver of premium rider. Explanation. The waiver of premium rider ensures that an insured's premium payments are waived while they are disabled and receiving benefits, maintaining the policy in force at no additional cost. Incorrect options. COLA rider adjusts benefits for inflation but does not waive premiums. C. Guaranteed insurability rider allows purchasing additional coverage. D. Return of premium rider reimburses premiums at policy maturity or upon early termination. Question 9. In Louisiana, what is the primary purpose of the free look provision in a disability insurance policy? A. It allows the insured to convert group coverage to individual coverage. B. It allows the insured to review the policy and cancel it for a full refund within a specific period. C. It provides additional time to pay premiums after the due date. D. It ensures that pre-existing conditions are automatically covered. Answer. B. It allows the insured to review the policy and cancel it for a full refund within a specific period. Explanation. The free look provision gives policyholders a period, typically 10 to 30 days depending on state regulations, to review the policy and cancel it for a full refund if they are dissatisfied. This protects consumers from being bound to unfavorable policies. Incorrect options. A. This refers to conversion privileges, not the free look period. C. This describes the grace period of provision. D. Free look does not automatically address pre-existing conditions. Question 10. Which of the following is TRUE about presumptive disability, ECA disability income policy? A. It only applies if the insured is unable to work in any occupation. B. Benefits are paid even if the insured could work in another occupation. C. Benefits are payable only after the elimination period is complete. D. Presumptive disability only applies to short-term disability policies. Answer. B. Benefits are paid even if the insured can work in another occupation. Explanation. Presumptive disability refers to situations where certain severe disabilities, e.g. loss of sight, hearing, limbs, automatically qualify the insured for benefits regardless of their ability to work. This provision eliminates the need to prove ongoing disability. Incorrect options. A. Presumptive disability does not require any occupation restrictions. C. Benefits may begin immediately depending on policy terms. D. Presumptive disability applies to both short-term and long-term policies. Let me know if you need more questions or further assistance. Question 11. Which of the following riders in a disability policy provides benefits if the insured experiences a partial loss of income due to disability? A. Residual disability rider. B. Cost of living adjustment COLA rider. C. Future purchase option rider. D. Accidental death and dismemberment AD rider. Answer. A. Residual disability rider. Explanation. The residual disability rider provides benefits when an insured can work part-time or at a reduced capacity and loses a portion of their income. Benefits are proportionate to the income lost. B. COLA rider adjusts benefits for inflation. C. Future purchase option allows buying additional coverage. D. AD rider provides benefits for accidental death or severe injuries. Question 12. Under Louisiana regulations, what is the maximum allowable time for an insured to bring legal action against an insurer after a claim denial? A. 60 days. B. 1 year. C. 2 years. D. 3 years. Correct answer. C. 2 years. Explanation. In Louisiana, the insured has up to 2 years to bring legal action against an insurer after receiving a claim denial, provided they have complied with policy requirements. The 60 days applies to some waiting periods, not legal action. B. 1 year is incorrect in most disability policies. D. 3 years exceeds the standard legal action time frame in Louisiana. Question 13. Which of the following describes recurrent disability, ECA disability insurance policy? A. A disability that occurs multiple times for unrelated reasons. B. A disability that recurs from the same cause within a specific time frame. C. A disability caused by 2 or more concurrent injuries. D. A short-term disability that transitions into a long-term disability. Answer. B. A disability that recurs from the same cause within a specific time frame. Explanation. A recurrent disability is one that arises from the same illness or injury as a previous disability within a stated time frame, e.g. 6 months. It is typically considered a continuation of the original claim. A. This describes unrelated multiple disabilities. C. Concurrent injuries refer to combined disabilities. D. This describes a transition of benefit periods. Question 14. In a group disability insurance policy, who receives the master contract? A. The insurer. B. The individual policyholders. C. The employer or group sponsor. D. The state insurance commissioner. Answer. C. The employer or group sponsor. Explanation. In group disability insurance, the employer or group sponsor receives the master contract while employees receive certificates of insurance as proof of coverage. A. The insurer issues the contract. B. Individual policyholders receive certificates, not the master contract. D. The state insurance commissioner does not hold the contract. Question 15. What is the primary purpose of the recurrent disability provision in a disability policy? A. To prevent an insured from claiming benefits for a second time. B. To allow a new elimination period for a second disability. C. To simplify claims processing for related disabilities. D. To ensure pre-existing conditions are excluded. Answer C. To simplify claims processing for related disabilities. Explanation: the recurrent disability provision allows a previously disabled individual to resume benefits without a new elimination period if the same disability recurs within a specified time frame. A. This provision does not prevent claims. B. It avoids a new elimination period, not adds one. D. Pre-existing condition clauses are separate. Question 16, scenario-based. James owns an individual disability policy with a 90-day elimination period. He becomes disabled on January 1st and is unable to work. When will James begin receiving benefit payments if he remains disabled? A. January 31st. B. March 31st. C. April 1st. D. April 30th. Answer C. April 1st. Explanation: with a 90-day elimination period, benefits begin on the 91st day following the onset of disability. If James became disabled on January 1st, the 90th day is March 31st and benefits begin on April 1st. A. January 31st is too soon. B. March 31st marks the end of the elimination period. D. April 30th is incorrect timing. Question 17. What is the main purpose of the guaranteed insurability rider in disability insurance? A. To provide coverage for partial disabilities. B. To adjust benefits for inflation. C. To allow the insured to increase coverage without evidence of insurability. D. To ensure the premiums remain level throughout the policy. Answer C. To allow the insured to increase coverage without evidence of insurability. Explanation: the guaranteed insurability rider allows policyholders to purchase additional disability coverage at specific intervals without undergoing new medical underwriting. A. This describes the residual disability rider. B. Adjusting for inflation is done by the COLA rider. D. Premium guarantees are separate. Question 18. Which of the following defines own occupation disability in a disability income policy? A. The inability to perform any gainful employment. B. The inability to perform the duties of one's specific occupation. C. The inability to work for a specific employer. D. The inability to perform two or more daily activities. Answer B. The inability to perform the duties of one's specific occupation. Explanation: own occupation disability means the insured is considered disabled if they cannot perform the duties of their specific occupation, even if they can work in another field. A. This describes any occupation disability. C. Employer-specific limitations are not relevant here. D. This refers to long-term care policies. Question 19. What is the purpose of a cost of living adjustment COLA rider in a disability insurance policy? A. To allow premiums to increase with inflation. B. To increase benefits over time to offset inflation. C. To allow the insured to purchase additional coverage. D. To reduce premiums after a certain period. Answer B. To increase benefits over time to offset inflation. Explanation: the COLA rider ensures that disability benefits increase over time to keep pace with inflation, maintaining the insured's purchasing power. A. Premiums are not directly affected. C. This describes the future purchase option rider. D. Premium reductions are unrelated to COLA. Question 20. If an insured fails to pay their disability policy premium during the grace period, what happens to the policy? A. The policy remains active indefinitely. B. The policy terminates. C. Benefits are reduced proportionally. D. The policy is automatically converted to a paid-up policy. Answer B. The policy terminates. Explanation: if the premium is not paid by the end of the grace period, the policy lapses and coverage is terminated. A. Policies cannot remain active indefinitely without payment. C. Benefits are not reduced. They are forfeited. D. Conversion to paid-up policies applies to life insurance, not disability insurance. Let me know if you need more questions or any other type of preparation support. Question 21. Which of the following provisions in a disability income policy ensures that benefits will not exceed the insured's actual income? A. Coordination of benefits, COB. B. Overinsurance provision. C. Income replacement clause. D. Guaranteed insurability rider. Answer: B. Overinsurance provision. Explanation: the overinsurance provision ensures that the total benefits received from all disability policies do not exceed the insured's pre-disability income. This prevents financial incentives for remaining disabled. A. COB applies more to group health insurance. C. Income replacement clause refers to policy design. D. Guaranteed insurability allows future coverage increases. Question 22. What is the waiting period for Social Security disability benefits to begin after the onset of a qualifying disability? A. 30 days. B. 90 days. C. 5 months. D. 6 months. Answer: C. 5 months. Explanation: Social Security disability benefits require a 5-month waiting period after the onset of a disability before benefits are payable. This ensures that only long-term disabilities qualify. A. B. These are shorter waiting periods. Not applicable. D. 6 months is incorrect for Social Security. Question 23. Which of the following terms refers to the maximum period a disability policy will pay benefits? A. Benefit cap. B. Benefit period. C. Elimination period. D. Policy term. Answer: B. Benefit period. Explanation: the benefit period is the maximum duration for which benefits are payable under disability policies such as 2 years, 5 years, or until age 65. A. Benefit cap refers to dollar limits, not time limits. C. Elimination period refers to the waiting period before benefits start. D. Policy term is the overall length of the contract. Question 24. Which of the following is not a factor used to determine the cost of a disability income policy? A. Occupation. B. Elimination period. C. Benefit amount. D. Marital status. Answer: D. Marital status. Explanation: marital status is not typically a factor in determining disability income premiums. Premiums are based on factors such as occupation, elimination period, benefit amount, age, and health status. A, B, and C. These are all key pricing factors. Question 25. Which of the following describes a presumptive disability provision in a disability income policy? A. Benefits are only paid after the elimination period. B. Benefits are automatically paid for severe losses such as loss of limbs or vision. C. The insured must provide proof of loss monthly. D. Benefits are paid even if the insured can still work part-time. Answer: B. Benefits are automatically paid for severe losses such as loss of limbs or vision. Explanation: the presumptive disability provision assumes total disability and begins benefits immediately if the insured experiences severe conditions such as loss of sight, hearing, or limbs. A. This is related to elimination periods. C. Proof of loss refers to standard claims. D. Part-time benefits relate to residual disability. Question 26. Scenario-based. Linda has a disability policy with a residual disability benefit. Before becoming disabled, her monthly income was $4,000. After her partial disability, her income is reduced to $2,400 per month. If her full disability benefit is $2,500, how much will Linda receive under the residual disability provision? A. $1,200. B. $1,500. C. $2,000. D. $2,500. Answer: A. $1,200. Explanation: residual disability benefits are proportional to the percentage of income lost. Incomeless equals $4,000. 2,400 all equals $1,600. 40% income loss. Residual ben equals 40% of full benefit. $2,500 equals $1,000. Thus, Linda receives $1,200. Question 27. What is the key distinction between any occupation and own occupation definitions of disability? A. Any occupation focuses on the insured's ability to work any job, while own occupation focuses on their specific job. B. Any occupation covers part-time jobs only. C. Own occupation does not pay benefits under long-term policies. D. Own occupation requires higher medical documentation. Answer: A. Any occupation focuses on the insured's ability to work any job, while an occupation focuses on their specific job. Explanation: any occupation considers the insured disabled only if they cannot work any job suited to their skills, education, and experience. My own occupation focuses specifically on the insured's ability to perform their current job duties. Question 28. Under Louisiana law, how many days must the policyholder wait to file a lawsuit after submitting a proof of loss? A. 30 days. B. 60 days. C. 90 days. D. 180 days. Answer: B. 60 days. Explanation: Louisiana law requires that policyholders wait at least 60 days after submitting a proof of loss before filing a lawsuit against the insurer. A, C, and D. These time frames are not correct for this legal action. Question 29. What is the primary purpose of a waiver of premium provision in a disability insurance policy? A. To refund premiums if the insured cancels their policy. B. To waive the insured's premiums during a qualifying disability. C. To reduce premiums after a claim is paid. D. To ensure the policy stays active after the term ends. Answer: B. To waive the insured's premiums during a qualifying disability. Explanation: the waiver of premium provision allows the insured to stop paying premiums while receiving disability benefits, ensuring the policy remains active during the disability period. Question 30. Which of the following benefits would likely end when an insured reaches age 65? A. Residual disability benefit. B. Partial disability benefit. C. Total disability benefit. D. All of the above. Answer: D. All of the above. Explanation: most disability insurance benefits, including residual, partial, and total disability benefits, end at the policy's benefit termination age, commonly age 65. Policies can differ, but this is the industry standard.